Welcome back to Strong Man Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term boglehead investor. I'm author of the book, Stop Being a Broke Loser. It's on Amazon. And I'm a well-known critic and hater of Tattooed Chef, or as I like to call it, Tattooed Nutsack, or Tattooed Trucker's Taint, whatever suits my fancy. Now, I'm also known for making a lot of lafufu noises like, "Reew!" and "Holy smokers and tacos!" But I'm feeling kind of sick today. Maybe I picked up something from the behind the biker bar. But I'm not going to be doing a lot of lafufus. But what I am going to do is I'm going to talk about financial education's favorite stock, Tattooed Chef. Now, if you don't know what this company is, that's okay. You're a normal human that doesn't watch YouTube like a degenerate. And you don't buy garbage stocks, probably. But Tattooed Trucker's Taint is a plant-based food company that offers sourced plant-based food. Now, we all know there's, the rage and, craziness around, and probably a bubble, around plant-based food. Everybody's going to stop eating meat. We're all going to be soy boys. We're all going to buy very small portioned items and pay a premium for them because plant-based is the future. That's kind of the thesis behind why these clowns on YouTube are buying Tattooed Trucker's Taint. Now, as we've seen, the bubble's been bursting in these plant-based companies. So we can go to Beyond Meat, which has been freaking shellacked over the past year. We have, what's another stupid company? I can't even remember. Oatly, maybe? I don't think they're plant-based food. Oatly, been freaking annihilated. I mean, like, all of these, like, soy boy products, they're just getting freaking crushed, okay? And that's because they're not growing as people expected they would. Now, what we're going to do is we're going to look at Tattooed Trucker's Taint's last 3 quarterly statements, and I'm just going to tell you why I don't like the company, okay? And if the company ever becomes profitable and I can, project some cash flows, okay, maybe I'll consider buying the stock. I'm not against buying Tattooed Trucker's Taint if it's actually a good stock. But the issue with this stock is it's not freaking profitable. Not in the slightest. That's a big freaking problem, okay? When you're buying stocks, you can, of course, try to buy a stock before it becomes well known and you'll potentially make trillions of dollars, like Tesla. But in reality, if you buy a bunch of stocks like this that are losing money, you're going to be selling your tight little, soon-to-be loose butt cheeks behind the biker bar to a bunch of bikers that are going to be freaking dry humping you and then inserting their massive you-know-whats into your orifices. You don't want that to happen to you, okay? But if you put all your money into a stock like Tattooed Chef, you're going to be down 50% or more because there's no underpinning value to the company. As a matter of fact, the only value that I can attribute to this company is per share. The per share price is the book value per share. And even then, that may not be the true worth of the company because it's not as simple as looking at the book value per share to determine the actual worth of the company. So let's go look at a couple quarterly reports for Tattooed Trucker's Taint. So here's the first report, and this is for the 3 months ended March 31st, 2021. This is the income statement. They call it the Consolidated Statement of Operations, but it's the same freaking thing, okay? Now, a couple things I like to look at, and everybody looks at, obviously, is gross margin, operating profit, and net profit. There's differences, okay? If you look at this income statement, at the top you have revenue. This is the stuff the company sells. And then you have cost of goods sold, the actual cost of the food, okay? They have to make the food or source it, package it up, and then ship it out. Well, shipping is a selling expense. Shipping out, freight out is a selling expense. But basically all the costs to make the product and get it ready for, delivery to the customer, that basically goes into cost of goods sold. And then you have ancillary expenses like, selling, general and administrative expenses that determine your operating profit. So when you're looking at an income statement, you take the sales and you first subtract cost of goods sold to get your gross profit. That's the profit the company makes just on their food without considering, other expenses that are part of a company. Interest, taxes, and selling, general and administrative expenses. So you can determine the profit margin of the company through multiple layers of the income statement. Let's start with gross profit. So for the first 3 months of March 31st, ended March 31st, 2021, the gross profit margin is the gross profit divided by the revenue. 12.86%. So they make 12.86% off of everything they sell before you consider any other expenses that are outside making the product. Okay, there's other expenses of a business. So it was 12.86%. Now, generally you want to see improvement. So let's go look. And I haven't looked too deeply into these financial statements. If I see an unprofitable company, I'm not freaking buying it, okay? So we have the first quarter there. We'll put that on the left. The second quarter ended June 30th. Let's see, 3 months into June 30th. We take 7966 divided by 5716. Okay, they actually increased their gross profit. So that's good for the second quarter, all right? And then we go look at the third quarter. Let's see, open another one. And we get, for the 3 months ended September 30th, it would be 944 divided by 58,780. So they're very all over the place. So here's what I have. I have in the first quarter of 2021, they had a 12.8% gross profit. Then in the second quarter, they had a 15.7% gross profit. Okay, that's an improvement. You want that to be improving because the lower the gross profit, the harder it is for the company to become profitable. Okay, you want that to be, at least level so you can project it out or getting better. Okay, but with Tattooed Truckers Taint, I don't know what happened here, but their gross profit fell from 15.7% the quarter before to freaking 10.11%, okay? That's a very small gross profit right here, 10.11%, because you have to pay for other expenses before you can make money, okay? Now, let's go look at operating profit. All right, so we've basically seen an overall decline over the last 9 months for the statements they've produced. I don't think they've come out with their last quarterly statement, all right? So next, we're going to look at their operating profit, which is their income loss from operations. Now, if you notice there, they have a loss from operations because they had gross profit right here. We'll zoom in a little bit more for you. This 677 right here is their gross profit. That's just from selling their food. And then this number right here, this 13,795, that's operating expenses on top of the food, leading to a freaking loss, okay? And I don't even have to go down further and look at the net income because, of course, they lost freaking money. So if you look at their net loss from operations, their loss for the first quarter was negative 13%. So just on operating expenses, that's before interest and taxes. Well, I mean, they're probably getting tax benefits, but because they're losing money, they're unprofitable. Their operating margin was negative 13.3%, okay? For the second quarter, oops, I did not mean to do that. For the second quarter, we have the 3 months ended June 30th. So we have 7934 divided by 5716. So now we have a loss of 15.64 on their operating margin. I didn't make it negative, but it's a loss, okay? So they lost 13% operating margin in the first quarter. In the second quarter, they had a negative 15.6. So their operating loss is getting worse, okay? And then we look at the third quarter. Does Lufufu talk about this? Of course he doesn't. We all know who Lufufu is, okay? And then in the third quarter, their operating loss was 58,780. 13%. So if we look at these side by side, we have 13% loss, and then we have 15% loss, and then we have 13% loss. I'm not seeing any improvement here, okay? I've seen their freaking gross margin go down, which is a very bad sign, and I've seen their operating loss basically stay flat. Tell me why you would buy this company. I don't freaking understand, okay? That's why it's not profitable. You can wait until this freaking company becomes profitable before you consider buying it. But if you don't wait for that, you're speculating. You don't know what this company's gonna do. Okay, maybe they'll fix their crap. Maybe they won't. I don't freaking know. But it's not worth my time or my money to risk that. Okay? Now, when I was looking at the financials, you can determine their book value per share by taking their book value, which you can just use their equity account, and divide it by the number of shares outstanding. That's the book value per share. So, for example, for the balance sheet, September 30th, 2021, you would take total stockholders' equity down here, this $225 million, divided by the number of shares outstanding, okay? That's the book value per share. Now, am I going to do that right now? No, but that's all you got to do. But basically, what I did before, when I did that, it was like $2. The stock was worth $2, okay? That is theoretically the floor of this stock, but it could go lower. I mean, market sentiment. But that's how you'd calculate that. But looking at this stock, I mean, holy freaking crap. I mean, it's been freaking shellacked. And there could be no respite for you because there's nothing underpinning this company. It's just losing freaking money. Okay, it's stupid. Now, stocks like this went up, you know, I mean, obviously, you know, LaFufu. He freaking got into this stupid piece of crap. I don't even know when he bought it. But you can see it went public. Or they get merged. And then it actually, I think it actually went public or merged with the SPAC. Looks like in May 2020. And then it freaking skyrocketed because it was a freaking bubble right during the stupid pandemic bull market. And then everybody's like, oh, it's the future. And they all bought up here. And look what freaking happened, ladies and gentlemen. No underpinning. There's nothing undergirding this company. Okay? It's freaking trash. You can wait. You can wait. Okay? I know I like joke around, but I'm really telling the truth. But if you go and you search YouTube and you look up Tattooed Chef, the biggest freaking offender right here is Jeremy Financial Education. I don't know what numbers he's looking at. I don't know how he gets these freaking price targets and predictions. Here he is. Look how look at his face. Look at this guy. Do you think he's sleeping well? Look at his freaking face. He looks like worn out and haggard and terrified. He looks like crap. Here he is. Tattooed Chef will make me $10 million. Woo! Really? How do you come by that, LaFufu? I think he has like $1 million invested. Why Tattooed Chef stock will 10x? 1,000%. Tattooed Chef. Tattooed Chef, Tattooed Chef. It's idiots like this pumping these stocks that result in you getting freaking shellacked like this, okay? I would stay away from this stock. Now, you can buy it, but just know the underpinning, the theoretical underpinning of this stock is its book value, because I don't know the freaking fair value. I mean, it could be less, the net fair value of the net assets, but it could be way less than the $2 and whatever I got before. But that's my thoughts. I wouldn't do it. You don't have to listen to freaking losers like this who pump this stock because they get swept up into bubbles and hype and screw you over and then charge you for their stupid course. But that's it for Tattoo Truckers Taint. You let me know your thoughts. Like, subscribe, tell your friends about me, and I'll talk to you later. Cheers!